Hi trader, welcome to the weekly Forex video. This time taking a look at the reaction of the Forex market to the French first round election. First though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please note that trading for exchange and global financial markets, trading those is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. So today, the 24th of April, euro dollar has been moving up, has gapped up over the weekend as the French elections took place, the first round of those, and the winners seem to be Le Pen and Macron, who will be facing each other in the second round about 2 weeks from now. So that was seen positively by the market, the euro dollar moving up, the euro gaining against the dollar basically, as the market is looking for a Macron win, which is more in favor of the EU and basically the Eurozone than Le Pen is. So that is basically the positive news here that is pushing up the euro dollar, and price has been the 109 resistance spot. So pretty expansive here, 200 pips to the upside, and I think that this rally could still push a bit higher. You can see that the channel that I have here, 109.50 is the top, 110 is a strong resistance trend line, plus of course the psychological round level. So those are levels to keep in mind, 109.50, 110. A bearish turn or a bounce could happen at that spot. Now the question is, will basically price get to those levels? And if we look at the hourly chart, you can see that, if you consider the gap to be momentum, then that could lead to a follow through. You see on the oscillator a strong push. So one thing to keep an eye on, I think, is just to put a fib like from here to here, or on a 4-hour chart, perhaps even from the very bottom like this. But I think using this recent swing high, swing low makes sense. And you can see already that the price has bounced off the 38.2 fib right here. So I'm going to be keeping an eye on the triangle kind of formation, or perhaps even a bull flag. Anything where price just stays around this level, kind of goes sideways, I think is a setup for a bullish break up to 109.50, perhaps 110, and then there should be divergence between these recent tops, and a correction and a bounce from that level is possible, right, and even probable. Now, if price were to, however, not make a triangle, but start to show aggressive bearish candles that go below the 50 or 61.8 fib, well, in that case, I would be more cautious with this bullish upside to 109.50, and I would be probably reanalyzing this, and I think this is something we can discuss in tomorrow's webinar. But for me, key, this zone basically, you got the top in here, you got the 50, 61.8 fib, the 78.6 fib could be a bouncing spot too, because then the gap is closed, of course. So as long as price stays above these levels, I think there could be a bullish bounce. The best, in my view, would be a triangle and a breakout. But if price does retrace more aggressively to any of these three fibs, it could be a bouncing spot and a potential continuation as well. Now, the only thing I want to basically warn for is that if there are very, very strong bearish candles here, I would definitely not be looking for a long. The only thing I would be looking for then in that case is some bullish kind of confirmation candlestick patterns that show that that bearish retracement is over. If that does not happen, I'm going to reanalyze that, and perhaps tomorrow I'll be saying, look at this momentum, now we're looking for a bear flag and a break. All right, so that's what if there's a strong bearish momentum, I would just not trade it basically, and then wait for a bear flag correction, and then try to trade it tomorrow or Wednesday. That webinar is tomorrow at 7 a.m. UK time, taking a look at trading patterns, momentum, and support and resistance. But in the meantime, Nenad has his weekly recap, of course, on Monday, and Wednesday he has a webinar, and Thursday we take a look at entry tactics in the market structure. So a lot of great things lined up here for webinars, so hope to see you in one of these. The pound USD itself did not basically move up as much as the euro dollar. You can see that it's making still this kind of correction on a 4-hour chart. One could say that price is making a neat triangle basically, or even a bull flag. And what I'm looking for is a continuation of that bullish momentum that we saw here in this piece to continue up to the minus 61.8 target at 129.30. So a break of this triangle, I think, could see that follow through, perhaps even extend up to 130, which is a psychological round level. And in that case, you can see momentum, correction down to the 50 fib, a triangle here, break of the triangle, and a push up to the minus 61.8. That's what I'm looking for. Basically, I'll be looking for a 4-hour candle that could break above this triangle. It has not done so far. You can see this candle is not a good breakout candle. So I will be looking for a decent breakout candle on the 4-hour chart to signal to myself that this breakout is ready, and I'll be trying to trade that break as the 4-hour candle closes, or only after the 4-hour candle closes with a good bullish candle. On the hourly chart, you can see the triangle too. This triangle is getting a bit, or bull flag is getting a bit long and lengthy. That's why I do prefer the 4-hour chart rather than the hourly chart. Looking at the dollar yen, last but not least, you can see that price is sturdily retracing to the downside. There was a bullish reaction to the news, yesterday's election news, and you can see it's challenging these bottoms. So will price respect those bottoms, or is this a bigger retracement? That's something that I think could go either way. Price has broken above this resistance trend line, so that is one warning sign. It also broke above this channel. So at this moment, I might even prefer the bullish continuation. The only thing is that at this moment, price is at serious confluence of resistance, looking at these purple lines and bottoms, plus the moving average. So when zooming into the hourly chart, what I might prefer is actually waiting for a pattern here too, some kind of sideways pattern like this that does not go back into the bottom here, the support level, I should say, the previous top at, let me check the level, at 109.50. So as long as price kind of stays above 109.50, I think a continuation is likely, and then we could see basically the bullish break here too, like this. All right. But if the 1-hour chart, however, shows some bearish momentum like this and tests the support trend line, in that case, I think the price is actually respecting this resistance, and I would expect a breakout below the trend line to occur. So if we see good momentum, challenges trend line, a bear flag, and continuation break, I think is the most likely. So the dollar yen is in a tough spot at the moment. I rather wait for more price action, more information, and depending if there is a bearish momentum or there is a bullish correction like this, then I would expect a bearish breakout or a bullish continuation, depending on which of the two develops. If you're interested in trading, check out admiralmarkets.com, where you can open an account. You can also get a lot of extra tools and information there, such as, of course, the Admiral Market Keltner bands and a lot of indicators, plus analysis, plus webinars. You can all check it out at admiralmarkets.com. Hope to see you in the upcoming webinars as well, and wish you all great trading. See you soon.